She was doing everything right and still paying 7 figures she didn't need to. This client is a majority partner in a law firm producing over $20 million a year. Serious income, serious professionals, serious advisors. Her structure? A standard S-Corp, which meant her share of the firm's profits flowed straight onto her personal return and got taxed at the 37% federal rate, plus state. That's not aggressive. That's just the default. And at that income level, the default setting is unforgiving. When she came to Quantus, the issue wasn't compliance. It was architecture. Too much income hitting the wrong tax layer at the wrong rate with no off-ramp. So we rebuilt the system. We implemented our virtual family office framework and redirected a $2 million management fee into a properly structured C-Corp MSO. Nothing disappeared. The work was real. The fee was justified. But those dollars stopped being taxed at personal marginal rates and started being taxed at corporate rates instead. That single move produced nearly $300,000 a year in structural tax savings. An effective rate drop from 47% to 32% on those dollars. And significantly higher retained capital inside the system. Same revenue, different tax layer. That distinction is everything. And we solved the part everyone worries about. The moment you say C-Corp, people think one thing: double taxation on the way out. We didn't ignore that risk. We designed around it. From day one, we built a relief valve directly into the C-Corp, so retained earnings and tax savings could be extracted efficiently without creating a second tax problem later. In other words, the savings weren't trapped. They were usable. That's the difference between a clever structure and a durable one. Even after the MSO shift, she still had substantial income passing through the S-Corp and landing on her personal return. That's where most advisors shrug. We didn't. Through coordinated personal level planning, we offset $3.28 million of income at the individual level, cleanly, legally, and without triggering excess business loss limitations. The result was over $1.4 million in personal tax savings on income that otherwise would have been taxed at the highest marginal rates. No smoke, no theatrics, just sequencing and design. All in, the original virtual family office strategy delivered $1.7 million in total annual tax reduction. Structural savings plus personal level planning. A framework that scales as income scales. Same firm, same success, radically different after-tax reality. And then we took it up another level. Once the structure was working, we didn't let the savings leak back into the tax system. We routed a portion of ongoing business profits into a tax-free environment, eliminating income tax on those dollars and allowing capital to compound without a tax headwind. No speculation, no timing games. Just profits captured once and then left alone to grow. We didn't change how much she earned. We changed how much of it stayed productive. This is what Quantus Group does. We don't sell structures. We don't push products. We design financial architecture for people whose biggest tax risk isn't audits. It's letting success compound taxes instead of capital. If you're making 8 figures and your tax strategy still ends where most advisors stop, you're not being conservative. You're being expensive. Quantus Group. Institutional thinking, individual application.